So Broadcom's revenue, AI revenue has surged about 63% in Q3 here. It's up to $5.2 billion at the moment. So today I was wondering, let's just have a look at Broadcom. What is the company? What's this all about? How are they trading at the moment? Is it a good deal? Let's have a look at it. So if we go onto here, we can see that AVGO, or AVGO, Broadcom Inc., they have risen about 140% the past year, and year to date they are up about 45%, right? So Broadcom is normally like a semiconductor business. They are making custom chips for other companies. Like I think they just had a deal with, let me just have a look. I think they just had a deal with OpenAI to make custom chips for them. It was like $10 billion, like something like that. And then they also have they have two segments, right? They have the semiconductor business, and then they have the infrastructure software or software business, if you can say that, right? So that's pretty much what Broadcom is. If we will have a look at it here, we can see that back in 2023, right? And that's the most important thing here. Hock Tan, which is the CEO of Broadcom, he's done an amazing job. Just want to say, amazing. They did acquire VMware, which is like a software company. They take different software products and like they put it together in one package, if you can say so. Like storage and data management, like cloud infrastructure. That's what Broadcom bought. They bought the company back in 2023 for $69 billion. In 2023, right? You can see it here. So let's just have a look at the business first of all, right? Because right now it's doing okay, but you can see here revenue is up 22% from the prior year. The net income is up, the earnings per share is up, the free cash flow is up 44%, or 44% of the revenue, right? See, the revenue is growing, the infrastructure software is growing quite a bit. The semiconductor solutions, which is the AI chips and the custom chips and stuff like that, they're also growing. So with more and more of the big companies spending a lot more capex on AI, right? So it's either going to Intel, Nvidia, AMD, and if they want to be a little more specific, they want some custom chips, they want some custom hyperscalers, I believe they're called, then Broadcom is where you go, right? They only design the chips custom, they don't produce them. So if you will have a look at it here, we can see if we're going into financials, then we say cash flow. If we're going down here, we can see that where's the capex? The capex for the company is only 548 million. That's nothing. That is absolutely nothing. If we would just have a look here, if we instead look at Nvidia, for example, they spent 5 billion in capex. 5 billion. Broadcom spent 500 million. They are spending 10 times more. And the most important thing about Broadcom is they also, Hock Tan, the CEO, he likes to buy companies and are insanely good at integrating them into the Broadcom's business model. So for example, you can see here 10 billion in 2020, they spent 26 billion in 2024. And if you have a look at this free cash flow per share, it's absolutely insane. 2020, it was $2.81 per share. Trailing 12 months, it's $5.31. I also brought a picture from my dividend portfolio. As you know, I am trying to find the best dividend stocks at the moment. I made a video 5 days ago about the Altria group. So I'm trying to, I have been dividend investing for about 3 years, I believe. Yeah, 3 years. And I actually bought Broadcom in, was that June 2021, I believe? Yeah. And then I sold everything, and then I bought again in like the start of 2022. Then I start building up my dividend portfolio again. and that's when in November 2022 I bought Broadcom shares. I bought 2 stocks for like $400 each, and then they made a stock split. So I had 20 shares with an average cost of $44. I sold them at the time for $234, but as you can see today, they are traded at $336. But I sold them in January because I needed the money, right? And these are all the stocks I had before, like Altria Group, Berkshire, Broadcom, JP Morgan, Texas, United Health, and Walt Disney. That's pretty much why I like Broadcom. But if you can see here, let's just have a look at it. See, the blue one is the semiconductor solutions, right? And the orange one is like the infrastructure software. So in 2022, most of the revenue, it came from semiconductors and a little bit of the Broadcom infrastructure software. 2023, it was a little bit more. What can you see here? It's a little bit more semiconductor. And then 2024, the VMware came through. So it's been a lot more half now, the revenue. So they're not relying on the semiconductors and they're not relying on the infrastructure software. So it's really a diversified like company, if you can say it like that. I couldn't find it when I had to look up for the research today, but I believe somewhere in the late 2024 they said that in a couple of years Broadcom's AI chips would produce like 80 billion of revenue. And look at this. If you have a look at this, the gross profit margins are 77%. 77%. That's insane. If you look at the net income margin, 31.5%. Absolutely phenomenal, right? And if we go and look at the revenue today, it's 51 billion. Last year it was 51 billion. And if the AI chips in a couple of years is an $80 billion revenue for Broadcom, then they still have the other custom chips and the hyperscalers. They still have VMware and the infrastructure software. It's a very profitable business. Profitable it is. If you look at it, the gross profit 2020, it was 17 billion. Last year, 39. They are growing so much and they are just making a lot of revenue, which is why they are also paying out dividends, which is the important thing. They are paying out dividends. If we have a look at this, they have been paying about 14 years, I believe so. Maybe even more because they got split up to Broadcom. It was a different business before. You see, in 2015, right? 4 cents a share. 2020, 33 cents a share. 2025, 60 cents a share. And they are raising the dividends again. In December, when the Q4 comes out, they're raising the dividends again. I promise you. It's probably going to be something around, my guess would be probably 65 cents a share, 67 cents a share. That's my guess. They're making so freaking much money. You can see here the dividend safety. They're only paying about 40% maybe, 40% of their free cash flow to dividends. And they're still buying back shares. They're still growing the company. I mean, it's a no-brainer. Last year they raised the dividends 12%. It's insane. The 10-year CAGR of the dividend growth is 32%. But I know that if you look at it, you can see the market cap is 1.6 billion. Not 1.6 billion, I wish. $1.6 trillion, right? So it's a big company. It's a very big company, for sure. You can actually see here, they are the 7th biggest company in the world at the moment, with $1.5 trillion. But if they can get just a tiny bit of this NVIDIA, of the entire AI pool, right? The entire AI stocks, the entire AI chips that has been made, let's say NVIDIA gets most of it. If AMD can get a little bit of the share, and if Broadcom can make some custom chips for big companies like Google, Oracle, like Facebook, whatever, they can make a lot of money, because as I told you, they are not producing the shares. They are just a free cash flow machine. They are only they are not producing the shares, they are only customizing them. 123 PE ratio. I wouldn't say that's much. Because if they can grow the revenue 100% the next 2 years, or next year, or probably the next 2 years, right? Then it's only a 50 PE ratio. About 50, 55 maybe. That's insane. And they're going to use they're making so much money. And Octane is probably going out to buy more companies to integrate into the business. It's an absolutely phenomenal business, right? It really is. I know if they're growing the shares, you can see here they skyrocketed the last year, or this year alone. But they are making so much money. It's insane. So I just wanted to say that to you. That's all. Thank you guys for watching. Bye bye.